silver on the monthly time frame, we can see here that silver, despite being in a range bound market according to the monthly chart with the moving averages pointing towards 3 o'clock, we can see that this month so far we've seen a very sharp test of the 200 EMA, and this 200 EMA has also been tested in December time 2015, which gives us a sign that we've got a very decent level of dynamic support here. Now, if past quirks are essentially an indicator of how things could potentially act in the market based on our better understanding of technical analysis, we can see that given the upward move that happened last time it tested the 200 moving average, that it could potentially happen again. So let's go down to the weekly time frame to see if we've got any more clues. Okay, we can see that week before last we had a bit of a is an understatement. We had test below the level here, this well-established level of support 1541. We can see that 1541 is a well-established level going back as a soft level of resistance and support since 2007, so for about 10 years. Okay, it's not a hard level, but what we can simply say here is it has responded pretty well before to price crashing through it and recovering, and that's represented by a false breakout. So last week closed as an inside bar, so this could potentially give us, given that inside bars on a technical level represent a changing of the guard and a shifting change in sentiment, what we could do here is simply treat this as a potential long entry. As we can see, week before last, it's just about a bullish pin bar reversal, but it's such a big bar that any reward to risk, given that entry would be above week before last's high, stop loss below week before last low, we can reasonably say that we're going to have to wait for a long time if the market does go away to even get a one-to-one. So we would need a more efficient entry, and what inside bars essentially gives us are a slightly more efficient entry, because what we can do is just place our entry just above last week's high, the buy bar, the inside bar, and stop loss below the low in anticipation of a move to the upside. Let's take a look at equity clock. We can see that summertime, typically silvers are bullish. Throughout July we see a bit of a correction in August, but after mid-August historically we've seen a very steady upward curve for silver, and okay, this is based on the last 20 years worth of mean data and is hardly representative being only 20 years. However, it's an extra clue for a potential medium to long-term long on silver. Okay, one way we could trade this as an inside bar, but of course those of you who know price action well, we know that actually having your stop quite close to your entry could potentially cause you to be pinged out prematurely. So where would the most optimal place be for a stop loss? Well, it could be below the week before last low here, at the point where it last spiked down and had the false breakout. So given we're not entering at the week before last high, what we could do is simply treat the week before last as a bullish pin bar reversal and 50 fib it, and place our entry at the midpoint of week before last's bar at the halfway point, and have our stop loss below the week before last's bar. Okay, so let's go back and simulate this so that it's really kind of like in plain view, if you like. Okay, so there we go. If we were to simply select the midpoint of this bar here, it means that if our entry is at the midpoint and our stop loss is below the low, then not only have we got a more efficient entry than entering at the high, by entering here, it also means that we can get our stop loss at a much more combative place, and it's a much safer place as well, actually below $15. So bearing this in mind, we need to hope that next week actually we see a bit of retracement, because our midpoint, our entry point, is around about here, and if we didn't take the break of last week's inside bars high, then we would hope for a bit of retracement to the downside. Okay, so that is a potential way to trade this one. You've got two options. You can either trade the break of last week's high, stop loss below the low. That's an entry that's likely to be filled. It's slightly riskier given that you've got a much smaller distance between your entry and your stop loss. Or what you could do is place your order in the midpoint of the week before last's range at around this point here, with your stop loss below the week before last's low. This will mean on one hand you might not get filled if price doesn't come back and triggers us into the trade, but if you do, it means that actually you have a much safer entry and stop loss. And what you could say feasibly is if you are entered at the midpoint of the week before last's and it does take out last week's low at this point, then the trade is invalid anyway, so you haven't lost that much. Okay, so that is a couple of ways you can trade silver moving forward, and that concludes this week's Market Insider. Have a fantastic remainder of the weekend. If you've got any questions, drop us a line at tradingfloor@thelazytrader.com.